So paper number 5, we are going to start with second paper. Question number 2. Question number 2. Right? The following transactions took place in the first month of operations of a retail business in relation to purchase and sale of goods. Requirement: receipt journal and cash payment journal. Cash receipt journal and the cash payment journal. And the following accounts in the general ledger. So we know that there are two types of ledgers: general ledger and the sub ledger. General ledger, we have all the T accounts, the ledger accounts, assets, liabilities, income, expenses, and the equity. And the sub ledgers are prepared to show the individual accounts of debtors and creditors. So we mainly have two sub ledgers or two personal ledgers: ledgers for debtors and ledgers for creditors. Debtors ledger and creditors ledger. So here they ask for the general ledger accounts, and also computation of the gross profit. So based on the information we have, we need to calculate the gross profit. So how do you calculate the gross profit? Gross profit is equals to sales minus cost of sales. So we have sales values here. The sales returns are given, purchases return, and also the closing stock value is given at the bottom, 300,000. So we need to calculate the gross profit. Right. So first, let's draw a cash receipt journal and a cash payment journal. Cash receipt journal and a cash payment journal. And also, even though they don't ask, I will be drawing or I will be preparing the other prime entry books which is relevant for this question. So what are the other prime entry books relevant for this question? We have return of goods purchased from demand. So what you purchase, return. So this is return outwards. And also return inwards. Return of goods by Nayagam means Nayagam is a customer, credit sales. So what we sold was returned by the customer. So we need a return inward journal or sales return daybook. Right, so let's draw cash receipt journal, cash payment journal, purchases return, sales return, purchases and sales. Right, so let's draw the ledger accounts. Sorry, not the ledger accounts. Initially, we will draw the prime entry books. So these are the prime entry books. We need a cash receipt journal. The format is date, receipt number, description, discount allowed, amount. And also this is analysis column. Under analysis column, we can have the cash sales, debtors, other income, and other receipts. Cash receipt journal. You can draw the cash receipt journal. And cash payment journal, date, voucher, description, discount and amount. Discount received and the amount. Okay. And the other side, the analysis, we have cash purchases, creditors, expenses, and other payments. Right. So please draw the cash receipt journal and the cash payment journal. If there are any doubts, anything if you want to clarify, please tell me. I will explain. And also, you can draw the purchaser's daybook, sales daybook, return inwards daybook, and return outward daybook. So you can say the daybook or the journal. That's it. Purchaser's journal, sales journal, right. So let's start with start recording the transactions in the prime entry books. Prime entry books. So in our accounting process, right? Once you collect the transactions, initially we record them in the prime entry books. So that's the second step: collecting, recording. Okay, so let's start recording the transactions. 2nd of January, cash purchases 200,000. Right. So purchasing, it's cash payment. 2nd of January. Voucher number, let's take it as 1. This is cash purchases. Amount is 200,000. We are preparing in thousands. So it comes under the cash purchases column. Cash purchases column. Then we have cash sales. 8th January receipt number, let's take it as 1. They are not given the receipt number, but order we will have receipt number 1. Cash sales. Amount is 300. So it comes under cash sales column. Cash sales column. Third transaction, credit purchases from Nima. So it goes to the purchases journal. Date is 10th of January. From Nima, purchases from Nima, 500,000. So purchases journal, we have to take 500,000. Return of goods purchased from Nima, it's a return outwards. What we purchased was returned to Nima. So it goes to the return outwards account, 100,000. 100,000. Then again we have another cash purchases, 400,000, which goes to cash payment. We have paid cash purchases, 400,000. Comes under cash purchases column. Cash purchases column. 16th of January, credit sales to David. So it goes to the sales journal. 16th of January, customer is David, 500,000. Customer David, 500,000. Sales journal. 18th January, payment to Nimal after receiving 20,000 discount. So it's a payment which goes to cash payment journal. paid to Niman. Discount is 20,000. Then the amount is 180. So it comes under the creditors column, 180. So total creditor is 200. Total creditor is 200. 20th January, credit purchases from Anurag. So it is another purchases, credit purchases from Anurag. Purchases journal 300. So we are separately recording in the relevant primetry books. So we have 7 primetry books, right? Cash, purchases, sales, return outward, return inward. Then there are 2 more, petty cash book and the general journal. Okay, so here we are doing all the 5 important primetry books. Credit sales to Nayagam. It is sales journal 22nd January. Nayagam 400. Right? Return of goods by Nayagam 150. So it is a return inwards 24th January. Nayagam is a customer. Sorry, here it should be customer. Nayagam is a customer. So customer is returning 150,000 worth of goods. Receipt of cash from David. So it's a cash receipt 25th January from David. 400. No discounts. So it's only amount 400. Yeah. So in the question they have asked only to prepare the cash receipt and cash payment. I'm drawing everything to show the full process. Right? You can simply do the cash receipt and payment journal, but better to know the full complete process. So later it might be useful. Okay? Because we don't know in our exam what they will ask. Sometimes they might ask only the prime entities, or sometimes they might ask only the ledger accounts. Right? So therefore, we will draw everything to understand the full process. 26th January, payment to Anura after receiving 10,000 discount. So discount is 10,000. 26th January, it's a payment paid to Anura. Discount is 10,000. Amount is 290,000. 290,000. Then finally, we have receipt of cash from Niagam 20,000 discount 230. So 30th January, third receipt from Niagam 20,000 discount 230 is the amount we received. So total 230. See, it's very simple. Preparing the cash receipt journal and the cash payment journal. Right? It's a 10 marks question. And let's calculate the total. calculating the total of each prime entry book. So there is no other income or other receipts. Even if you don't draw this, you will get the marks for this question. But to understand the full format, we have drawn the complete format of cash receipt journal and cash payment journal. Right. So total cash sales 300, total received from debtors 630, cash purchases creditors. Okay. Right. Now let's post these transactions into the general journal. Even though they ask only 4 accounts, I will do all the required ledger accounts for these transactions. Right? So I can show you how we are posting the transactions from prime entry books to the ledger accounts. So this is the general ledger. Okay. So first we have to record the amounts from the prime entry books. So initially, let's record the purchases, sales, return outwards, and the return inwards. So double entry for the purchases. Now, debtors and creditors, we don't know the opening balance. Okay, let's assume it's 0. Okay. Now, purchases journal total 800. Double entry for purchases is purchases account debit. You have to debit the purchases account and credit the creditors control account. Purchases. Purchases account debit. Purchases account debit. Creditors account credit. That's the double entry for purchases. Purchases account debit. Creditors account credit. Then we have sales. What is the double entry for sales? Debtors account debit 900 and sales account credit. Debtors account debit, sales account credit 900. So that's the double entry for credit sales. Credit sales. We are recording the transactions, the total amounts from the prime entry books to the general ledger accounts. Date is not compulsory. You have a date column, you can even here you can have the date. That's not an issue. I removed that because the account is fine. Return outwards. What's the double entry for return outward? Creditors account debit, return outwards account credit. Creditors account debit 100, and return outwards account 100. Purchases return. Sales return, return inwards account debit, and the debtors account credit. Return inwards. It's 150. 150. So we have recorded the transactions from the purchases, sales, return outwards, and return inwards. Purchases, sales, return outwards, and return inwards. Now let's take the transactions from the cash received and cash payment journey. So let's take from the cash received. So what are the transactions that we need to take? The total of debtors, total cash sales, and the discount. Right? So let's take the transactions from the cash received journal. Double entry for the cash received from debtors. Cash account debit, debtors account credit 630. So one entry is in the cash receipt journal or cash account. Other entry to the debtors control account. In the discount allowed account debit, you have to debit the discount allowed account and credit the debtors account 20,000. 20,000 from the debtors. Discount allowed to debtors. Discount allowed is expense. Therefore, expense account debit. Discount allowed account debit. Debtors control account credit. Here we didn't create the cash control account because the cash transactions are not given. So if you want, you can have a cash. They have not asked, but if you want to prepare, you can prepare a cash control account, and these cash transactions can be recorded debit and credit. Okay. Then we have payments. Payment to creditors, cash purchases, and the discount received. So we can record these three transactions. Payment. Paid to creditors, cash account credit, and the creditors account debit 470. 470. And discount received will be debited to the creditors control account. Discount received. Creditors account debit 30,000. And discount received is an income, therefore it will be credited 30,000 from creditors. Discount received. Right. Then we have sales and the purchases, the cash sales and cash purchases. I couldn't record the cash sales, so we'll record the cash sales. Double entry for sales, sales account credit, and cash account debit 300, and cash purchases, purchases account debit, cash account credit 600. So these are cash purchases and cash sales. So we have recorded all the transactions. Now let's take the total sales and purchases values, because we need to find out the gross profit. So a trading account is needed. So the difference in the sales and purchases we transfer to the income statement, and also the return inward and return outward we have to transfer to the income statement. Now the second part of the or third part of the question is computation of gross profit. Now we'll draw a simple income statement. Sales minus return inwards. No need to prepare the trial balance, because directly we can prepare the income statement. No need to prepare a trial balance. If they ask in the question to draw a trial balance, then we can prepare a trial balance. Otherwise, no need. If they ask income statement and statement of financial position, you can directly prepare the financial statements without preparing the trial balance. Income statement balance, didn't understand. That is the difference, like balancing the account. So if you take the sales account, credit side is more, you take the total of the credit side. So take that to the debit side, and the difference is called income statement. The difference is 1,200. Difference. And all these are income expense accounts, which goes to income statement. Balance carried down means now income expenses we can directly transfer to income statement. Now when it comes to debtors and creditors, assets and liabilities, we can take the balances. Assets and liabilities, we take the balance. Like this. Let's assume that there is no opening balance, then debtor balance is 100. Creditor balance is 800. Then balance can be down. 800 minus 600, so it is 200. 200. What is inwards and outward? Inwards means sales return. Return inwards means sales return. Return outward means purchases return. What we purchased was return. What we sold was return. Is return inwards. Sales return. So when preparing the income statement, now the total sales 1,200. Cash sales 300, credit sales 900. So total sales 1,300. Out of that is a return inwards of 150. So it will be deducted. Therefore, the net sales of the business is only 1,050. We have sold 1,200 worth of 1,200. That's the selling price. There is a return inward, sales return of 150. That will be deducted. What is compute? Compute means calculate. Calculate. This is the income, basic income statement. Right? I will explain the income statement in the class. So the basic income statement means gross profit equals sales minus cost of sales. So it's better to follow this format of income statement. Opening stock is 0. Purchases 1,400. Total purchases 1,400. And there is a return outward of 100. And the closing stock was given, was it 300,000? Yes, here it is given 300,000. The cost of the inventory as at 31st January is 300,000. So we have to take the closing stock as 300,000. There is a question. The statement of profit and loss is prepared once in month or year. Normally we prepare for the year ended, for the year. But in some situations, you might prepare a month or quarter or 6 months. But normal duration is annual. Right? So closing stock is 300. Therefore, the cost of sales is 1,000. Cost of sales is 1,000. The gross profit of the business is 50,000. The gross profit of the business is 50,000. Gross profit is 50,000. Closing stock was given in the question. Yeah, it was given. The cost of inventory as at 31st January is 300,000. So this closing stock only I have taken, yeah, 300,000. There is a question. Since they did not ask the net profit, we don't want to calculate. No, you don't need to calculate because you don't have other information to calculate the net profit. So to calculate the net profit, you need administration, distribution, other expenses, right? So this is not a complete question. They have given only transactions related to sales, purchases, return, and especially to calculate the gross profit. So we don't have any other information to complete the P&L or the statement of financial position. So we can stop from this.